In this video, I want to talk about TPL, Texas Pacific Land, and LandBridge, because these two stocks are dropping as the US market, the S&P 500, is reaching new all-time highs. These two companies, these two stocks are going down. Here we go for TPL going down. Now we are below $1,000. And here you go, LandBridge below $60. In this video, I want to give you a lot of information. Please leave a like to this video if you think it's helpful to you, because this is the video I wish I had when I started the research on TPL or LandBridge. Full disclosure, I don't own TPL, but I own LandBridge. And I know TPL because I've been a shareholder for a while. I mean, I first bought TPL in 2020, and I held for 4 years, and I sold at the top here at $1,600.50 or $650, something like this, in December 2024. So I know TPL quite well, and I sold here. It was almost a 10 bagger, and now I bought LandBridge. In this video, I want to explain the correlation between the two companies, the different thesis, what are the difference between TPL and LandBridge, different valuation, different business models, what is the better investment out of the two, why I own one and not the other one, why I'm still not buying TPL back, and all the drama, all the things, all the articles I saw about LandBridge, because I'm sure of something. Let me tell you, LandBridge is not understood. People don't understand LandBridge. People don't understand at all what this business is, and people have plenty of reasons to not buy LandBridge. And maybe this is a very, very good moment to accumulate more shares before the public knows it, before the public recognizes the value of LandBridge. So that was for my pitch of my video. Let me start with a quick introduction, and we can go straight into it. If this is your first video on this channel, welcome. My name is Christophe Nour. I've been a shareholder of TPL for a while. I invest in quality stocks. I've been investing for almost a decade now, and I have achieved a performance of 25% per year, including thanks to TPL, because it has been a wonderful investment to me. Very high margin, very, very profitable asset-light business model. It's a royalty business. So let me start with the starting point. And you see the performance of TPL going down for the past 6 months. And let me go back in history and tell you that when I sold TPL in November 2024, I made a video about this one. It was because of valuation. It reached a PE ratio of 80, so very, very high valuation. And I said, I expect the stock to go down because you will have a reversion to the mean. Let me start from there, and then we'll go a little bit more detailed in the analysis. We will go deeper and deeper in the analysis throughout this video. But let me start with the beginning so everybody understands where I'm going. If you look at the valuation for TPL, the business was fine, revenue was fine, margins were fine, the free cash flow was fine. But for the past 20 years, the PE ratio of TPL has oscillated between 15 and an extreme scenario of 10 during 2020, but let's say between 15 and 80. You have this fluctuation depending on the oil cycle, because this is a company that owns royalty in the oil and gas industry. Now they are diversifying away from oil, but still more than half of the revenue from TPL are coming from oil. So obviously it's linked to the oil market. So the PE ratio is oscillating between 15 and 80, right? And I sold here because of this clear point. Sometimes investing is that easy. You sell because you reach an extremely high valuation, and at the same time I saw other deals in the market. So it reached a PE ratio of 80, and now the stock has been almost cut in half, right? The PE ratio is 50, something like this. What is the drawdown of TPL right now? I think the stock should be down 40% or something like this. let me see, 43%, extremely down. And let me tell you straight away, I'm not buying the stock yet. I'm not buying the stock yet. I made other videos about this one. I'm waiting a little bit to $800. But I'm actively looking and monitoring the situation for TPL. Maybe this is the bottom, and psychologically $1,000 is a big deal, but still, to me, the stock is not cheap enough. You have a PE ratio between 40 and 50, which I'm not comfortable at all for this kind of business, more major. Okay, I want to start this video, well, it has already started, right? By showing you the correlation between these two companies. You have two stock prices. TPL is in blue here. TPL, that's this one. And LandBridge is in purple. What you see is a clear correlation between these two companies. In blue, you have TPL. In purple, LandBridge. Since, I don't know, November 2024, when TPL went to the moon, LandBridge followed, and when they crashed, it followed. What you see is the same oscillations, right? So they follow each other. You have a clear correlation, and that's also partly justified because people think LandBridge is also an oil play, which is not the case. But so it be, and because the valuation for TPL was stretched, it went down more. Okay. The valuation for TPL is higher. It's more expensive than for LandBridge. So on the way up, it goes up the same, but on the way down, TPL drops more. This is why you have, I believe this is my opinion. I think this is why you have a gap between the blue line and the purple line. And if you don't know why TPL went up so much in October 2024, it's because it was included in some indices, including the S&P 500. You know, the S&P 500 in the US is an index of 500 companies in the US. And if you are a big company, it's listed by market cap. So if you are a small cap and you become large with multi-billion dollars, $20 billion of market cap, like for TPL, you are forced to be included in the S&P 500. And you replace something else in the index that has gone down in value. So it was included in the S&P 600, 400, and then 500. And all of this creates inside institutional pressure to buy more shares. So it's like a virtuous cycle when you become big. So big funds buy the stock. And because the big funds buy the stock, the market cap goes up. And because the market cap goes up, it is included in a broader index. So institutions are forced to buy more TPL. And we've been enjoying this cycle for some time now. I mean, it's not the first time it was included. Here you go. In June 2024, TPL was included in another index. And I've seen 0 videos talking about this on YouTube. People start to talk about TPL now because it has dropped very well. But I've been following the stock for so many years. So people don't know the company quite well, actually. And this was the start of the momentum, very bullish momentum. And here you go. Now you had the rumors of the stock being included in the S&P 500. And in one day, in November 2024, it was included in the S&P. Like you had a press release. The stock was up 15% in one day. And LandBridge followed. And now you go back to a normal valuation. Yeah, it was perfect exit liquidity for anyone who wanted to sell their positions, including myself. And I think the stock can continue to drop at $80, maybe $700, but we will see. I'm not sure at all. Maybe it will rebound here. I've seen many comments under my videos, previous videos on TPL. When the stock rebounded here, people said that it will never go back to 1,000 because of the love for the stock. Well, now we see the reverse. People are not really happy with holding this bag for so many months. People are impatient, and this is very lovely for us long-term investors. I'm not in a hurry to buy TPL at all at such an extreme valuation. PE ratio of 50, not for my kind of investing. Some people will buy it, I know it, but not me. I will wait below $900 at $800, and I will buy in different tranches. Okay, so I wanted to start showing you the correlation between these two companies. They are deeply correlated, but one is dropping more than the other one because of a stretched valuation. For example, the price to free cash flow for TPL should be like 50 or maybe over 50, and the price to free cash flow for LandBridge is in the 30s. So not the same kind of valuation, right? I have some notes, so I don't want to forget anything else. Okay. Now, why is the stock dropping? This is maybe why you clicked on this video. First reason, and the most important one, you have a very high valuation, similarly to LandBridge, by the way. LandBridge had a very high valuation here with the price to free cash flow over 45 at some point. So first point, why you clicked on this video, this is why. One is valuation, you go back to reality. Two is you have some uncertainties towards the oil market, but this is just short-term news. It will just change in a few months and the sentiment will shift along the way. Three, people loved the story about TPL and LandBridge because of the hype for data centers. And now seems like the hype for data centers is no longer there. People are forgetting, and you have a new hype about robots, for example, or about something else. And a lot of people praise the LandBridge in 2024 because they expected the data centers to be here. And let me tell you a little bit of story since we have the time on this video. Let me do a quick recap on LandBridge, right? LandBridge created in 2021. Subsidiary of WaterBridge, if you can call it this way, that's the lens. With the private equity firm, 5 Point Holdings, blah, blah, blah. You have research online about this one. And they have lands in Texas, royalty lands. They make some acquisitions. And there was a rumor of a data center being hosted, welcomed on their land, LandBridge. Because the difference between LandBridge and TPL is you have contiguous lands for LandBridge, like big chunks of lands. Whereas for TPL, it's like a checkerboard. A little bit of land over there, a little bit over there. It's better to have a super hub of lands, big chunks of land to host your data center because you can have power plants, more infrastructure, water, recycling stuff, etc. So to some extent, LandBridge is better to welcome data centers compared to TPL. And at the beginning of 2025, they said or was it at the end of 2024? LandBridge said they signed an agreement with a data center project and they received $8 million. So starting point, right? You start to receive the money to lock your position. And they clearly said to investors, LandBridge said to investors, don't expect data centers this year. It will take a couple of years. Like we have 1 or 2 years to check the geography, check the sites, where are we going to build the data centers. And if it goes through, we will build this data center project, but for a couple of more years. And it seems like people are impatient now. I saw some tweets. I am still seeing some tweets. People saying that they are sleeping and they are not working fast enough. But the management team clearly said to us investors, it will take some years. Now we are at the starting point. And this is what I wanted to share with you also. People don't understand LandBridge. Some people think that LandBridge is a data center stock. It's a data center company, which is not the case at all. It's a water company after all. Some other people misunderstand the company and they say it's an oil royalty trust, which is not the case because oil revenue is only 10% of the revenue for LandBridge. I think 92% of the revenue doesn't come from oil. So LandBridge is not an oil play. Water is being used when you drill more oil, obviously, but it's not an oil play at all. It's about water infrastructure. Okay, they work with a company called WaterBridge. Most of the revenue, I would say, the majority, not the majority, but a lot of the revenue comes from WaterBridge. So water, not a data center play at all. It's only not even a promise. It's a plan for the next 5 years, but not now. And it's not an oil play. It's a water play. Okay. And for the same amount of drilling, now because we have another layer under the surface, you will need more water per gallon of oil. Okay? For each gallon of oil, you maybe need 3 gallons of water, but with time, sometimes you need 4 gallons of water, maybe 5. To some regions, it's up to 10. I'm not an expert on the subject. If you are an expert, I can be wrong. Feel free to comment on this video, under this video. But you need more and more water as you go deeper in the ground. So it's a pure play on water. Okay? People don't understand this one. And people are too impatient because you don't have a new article, a new press release about a new data center project. I mean, this people, the sentiment got ahead of itself to some extent. And people are impatient and they want some news. We are living in a world of digital world with a low attention span, and LandBridge is being a victim of its success. The stock went up so much during 2024. Now that it is consolidating, they want press releases. They want more revenue. They want more earnings. They want more announcements. And seems like they are working right now. And in mid-May, LandBridge had a press release on their article saying that 5 Point, I made a video about this one if you want to check on my channel. 5 Point, so the holding structure of the private equity company, announced a new company called PowerBridge. PowerBridge, up to $1 billion, that will host welcome data center projects and infrastructure, build the infrastructure on their lands, LandBridge's lands. So you have a partnership between PowerBridge, so electricity data center, with LandBridge on their lands, and with WaterBridge that manages the water recycling, transport, etc. How to use the produced water, all these kind of things. So you have a trifecta, a triforce between PowerBridge, LandBridge, WaterBridge. This is a virtuous cycle, and that is still developing. Every couple of months we have some great news, new development. The story is shiny, the story is clear for the moment, but people want more. People are impatient. It's not fast enough for the people, and I believe this is also the reason why the stock is dropping. So similarly, you have the valuation of TPL that is putting a way down on the stock. Similarly, people are impatient for LandBridge. So I think this partially explains why these stocks are dropping, because people want the story to happen faster to some extent. And I think they will be wrong, because the potential for LandBridge and TPL is huge actually, huge. Next topic, I've seen fake articles on LandBridge, and I've seen 0 videos on YouTube talking about this one. I've seen some fake articles about LandBridge saying that they had operational problems, projects being late, which is not true at all. There is 0 press release that are talking about these problems. And if you go down on these articles saying there are delays, etc., these are AI generated articles, and if you look for the source, there is no source. So I don't think these articles are correct. We are living in a digital era. You can invent, you can create stories if you want, and fake articles are real. I believe these articles are fake. I've also seen articles. Oh, this is you will like this. You will like this. I've also seen articles saying that there is an insider sale for LandBridge, saying that the chairman of LandBridge, David Capobianco, is selling all his shares. And I disagree with this. And I went through the reports, the filings. Basically, in LandBridge, in mid-May, so around here, they announced the PowerBridge structure. So a new entity to host data centers. They are working with somebody that already plugged a data center to another plant. So this will be the topic of another video. A few days after this, after the announcement, David Capobianco announced the selling of a few shares, and people freaked out. By the way, note how volatile this stock is. The sentiment for LandBridge is shifting a lot. It was up a lot and then down a lot, up a lot, down a lot, up a lot, down a lot, up a lot. Now we are down a lot. And you have this support here around $55. That can be pretty interesting, and maybe this is the bottom, but nobody knows. It's just a game of odds, probabilities. So you have a few articles saying that David Capobianco has sold. My next question for you is, have you read the article? Have you read the filing? Because I did. And I can show you what it means. Yeah, by the way, here you have, I received some comments on LandBridge. Well, Dividend 2 is saying, what are your thoughts about David Capobianco selling all his LandBridge shares when it hits all-time high? Two things are wrong here. One, he sold, what is the date? 23 of May. It was around here. I mean, not all-time highs, but fairly high. And he did not sell all his shares because on the filing, you clearly see that after the sale here, he still holds 51,000 shares, 51 million shares. Two things are wrong here. Please read the reports. Okay, let me do a quick recap of what is this form. It's a form for insider selling, and you are right. David Capobianco sold a little bit of his shares, but not his personal stake. He sold, if you scroll down, he sold through the reporting person 5 points. He sold, okay, he sold through 5 points through the private equity company. It's not his personal stake. He's just selling. And let me draw some things so you understand better, because I've seen so many people wondering about the structure of LandBridge. People don't really understand. Basically, you have 5 points. This is a private equity fund, okay? They have a few companies. They are specialized in energy and water. You have a few companies, and 3 of them are WaterBridge, WaterBridge, and they created LandBridge. And a couple of months ago, they created PowerBridge, okay? 5 Point owns the 3 of them, the majority shares. For WaterBridge, it's private. I think they own everything. For PowerBridge, same thing. It's private. It's not listed in the stock market. And for LandBridge, it's public since July 2024. For LandBridge, you have 2 kind of shares. You have the Class A shares. You have like $55 million of shares. Let me put something like this. 55 million of shares, or maybe, yeah, I think this corresponds to this one, so it should be like $51 million. Let me change this a little bit so it's clear. Let me put 50 million. You know what? $50 million of shares. And you have the Class B shares, like us retail investors. You have like what? $17 million of shares? 17 million shares, sorry. The majority of the shares are with the Class A, and they have all the voting rights. I think 1 share of Class A shares is equivalent to 100 B shares when it comes to voting. So the A shares, the insiders, have 100 times more power when it comes to voting. So us retail investors, we own only this, the Class B shares. And insiders, 5 Point, they own 50 million shares of Class A that are not listed in the stock market. So this is what is sold to the public. By the way, quick tip for you. I told you this was a video that was going to be filled with information. So we are going on every direction at the same time. You have to follow on this one. You can watch this video twice if you want. Some websites don't show you the truth when it comes to LandBridge, because they don't show you the real market cap. And Fiscal AI is a good example of this one. And Some people I respect are making this error. I don't want to name them, but please be careful. If you go to Fiscal AI, FinChat, you see a market cap of $1.4 billion, right? It will get you a cheap valuation, a price to free cash flow at 21. So if you only look at FinChat, Fiscal AI, you will see a market cap of $1 billion and price to free cash flow of 20. You say, oh, it's an incredible deal, especially compared to TPL, Texas Pacific Land, with a P ratio of 4, a price to free cash flow of 40 or 50. Okay. Now, if you go again on Guru Focus, you see a market cap of $1.3 billion. Guru Focus is also wrong because they only take into account the B shares that are public. So on Guru Focus, you will see a cheap valuation, etc., for a P ratio of 30. Very well. The market cap is wrong. What about Stock Unlock? Stock Unlock, that's normal. I mean, that's not the fault of their website. It's just that this is a recent IPO and the shareholder structure is a little bit complex. So it's normal. Maybe it will be fixed in a couple of months. LandBridge on Stock Unlock. Oh, Stock Unlock is right. You have a market cap of $4 billion, not $1 billion. So the metrics will be correct here. Congrats, Stock Unlock. By the way, if you want to use these websites, Fiscal.ai, Stock Unlock, you have discount codes in my description, like affiliate links. You get minus 15% or something like this. So it's a great deal. You can click on this one. Okay. So just to show you, some websites are wrong. You need to do the work. Similarly to the filings, you need to do the work. And we learned in mid-May 2025 that David Capobianco, through 5 Point, it's not his personal stake, it's through the entity, the private equity firm 5 Point, he sold a little bit of the Class A share. And after he transferred one class of share to another one, and then he sold. But still, it's an insider selling. I want to make it simple for you. He sold 1.9 million shares. Before the selling, through the 5 Point, you had 53 million shares, and he sold 2 million, like this. So you only have 51 million shares. Let me tell you something. What is 1.9 divided by 53? It's 3.5%. So you have an insider selling, yes, but he sold only 3% of his stake. And this is not the first time it happens. He also sold some shares in December here. So no panic at all. You had a lock-in period up to December. In December 2024, insiders could start to sell their positions. So he sold a little bit here. And he sold now in May. Again, I saw some articles, some people saying it's the first time he's selling everything. People are panicking. These people assume he sold all his LandBridge shares. First, it's not his, it's part of the company. And two, he only sold 3% of the position, okay? So much misinformed, bad information, because this is not a very well covered company. Let's put it this way. Okay. So insider selling, what can I show you here? 1 point, it's the equivalent of $140 million, something like this. Do you have the amount? On some websites, you have the amount. Well, he sold 2 million shares. That's the equivalent of $100 million, $140 million, something like this. Okay? So no panic at all. It's only 3% of his position. And he sold through 5 Point. Now, I want to go a little bit deeper. What are the reasons he could sell his LandBridge shares? And I want to make some forecast here. I've seen 0 people talking about this. Maybe I'm completely wrong on this one. And maybe some experts will comment on this video saying that I'm stupid and completely wrong. But here is my guess. You have a few reasons to sell your stocks. One, it's for somebody like David Capobianco, they are too expensive. And maybe you want to use this capital for your own sake, which is not true because that's not his personal portfolio. That's 5 Points portfolio. Maybe he's selling some of the profits for LandBridge, 3%, and he will re-inject the proceeds into other entities. I told you that 5 Point holds maybe a dozen companies in the energy sector, but maybe he will use some of the proceeds of the insider selling to re-inject the profits to WaterBridge. And if he does this, if he takes $140 million back to WaterBridge, this amount will be used. Let me draw. I would like to draw. These proceeds will be used to develop new infrastructure, right? New facilities, new transport, more water infrastructure, water development. Who will benefit from more infrastructure from WaterBridge? Guess what? It will be on LandBridge's land, because WaterBridge is developing all their water infrastructure on these lands from LandBridge. So actually, that could be a little bit tricky, but he could finance WaterBridge's operations to get more infrastructure that will get more revenue for WaterBridge. And as you build more infrastructure on their lands, LandBridge will benefit. So actually, more infrastructure can bring more revenue for LandBridge. And maybe, now I'm just guesstimating, it's just a forecast, and maybe I'm completely wrong on this one, but maybe he can finance the operations of WaterBridge through the sales of LandBridge. That should be just some financial engineering. And as I told you, the majority of the shares, Class A, Class B, the majority of the shares are Class A, 50 million shares. You have all the voting rights. So he can sell the Class A shares and still have the majority of the voting rights and have all the control. So he can, as for example, as if LandBridge goes up in the future years, you can sell 3%, 3%, 4%. You sell a little bit of LandBridge to finance WaterBridge internally. And thanks to the financing, you create more infrastructure. More infrastructure means you use more lands, more efficiency. That will get a royalty to LandBridge. LandBridge will make more revenue. They have 90% margins, so it will be a pure profit play. LandBridge will generate more free cash flow. So the stock price of LandBridge will go up because in the long term, stock prices follow free cash flow per share, earnings per share, free cash flow. So if LandBridge is more profitable, the stock will go up. And if the stock goes up, they continue to trim and sell the positions. Sell some shares to again finance more WaterBridge, more infrastructure. It can be, that's a 20-year play I'm talking about. So maybe it's highly speculative, but why not? Everything is possible in this market. I've seen this scenario happen for some businesses, so maybe it can happen. I'm just guessing at this point. Maybe I will be completely wrong. I talked about WaterBridge and financing the operations about WaterBridge, but it can be the same thing for PowerBridge now. You sell a little bit of LandBridge to finance the operations for PowerBridge, to entice people to create a gas station, not a nuclear plant, not in the region, but you can use the gas over there that will create more infrastructure about power. And as we know, LandBridge is doing deals with energy infrastructure. They get a spread, they get a royalty, a spread, and something about the capacity of the infrastructure, about energy. So again, this will create revenue for WaterBridge. It's a virtuous cycle. That's the very, very long-term play for LandBridge. And if you have this beautiful flywheel, this beautiful infrastructure, you are now looking at LandBridge, a potential multi-bagger. And I bought more LandBridge on the way down. I already had a position in my portfolio, a starting position. I was not comfortable buying like 10% of my portfolio because the valuation was expensive. But now the stock has dropped. So I bought more at $60 and I bought more at $50, $55, $56. Okay? And if it goes down to $50, I will buy more. If it goes down to $45, I will buy more, as long as the thesis is intact, right? But I wanted to make this video to just destroy all the fake ideas people have about LandBridge. People think it's an oil play, it is not. People think it's a data center play, it is not. People think the chairman has sold all his shares, it is not true. And maybe this is what is happening. Well, I told you, for this golden scenario, I don't think it will happen. I don't know if they will sell a lot of their shares in the future to finance internal operations. I'm just guessing at this point. So let me check my notes. And okay, yeah, let me talk about the future of LandBridge. The future for LandBridge is bright. Well, that could be a title for a YouTube video. Is the thesis still intact when it comes to TPL, that is dropping like a rock, and LandBridge, that is dropping like a rock? The thesis around LandBridge is very simple. They will get royalties because WaterBridge is thriving. The water segment in the Permian Basin is thriving. You need more volume, more processed water, all these kind of different water transportation. Now TPL is having a subsidiary to recycle the water a little bit. It's kind of working, and WaterBridge may follow this. Yes, the water has a boom in the Permian Basin, and water is still a bottleneck for data centers. You have some projects, some cities that are suffering right now because of you don't have a lot of water infrastructure. You have a lack of infrastructure when it comes to water. They don't know where to put the produced water. You need a lot of capital to have this, to fix this bottleneck. If AI is real and AI will change the world, which I believe in, I mean, there is no going back, right? You will need much more data centers that will need much more energy in the future, that will need much more water. TPL has exposure to some lands and some energy, it will be great. But LandBridge has a better focus when it comes to energy and water. So if you think the water is still a bottleneck for this industry and for the world, LandBridge is a great bet. And LandBridge will have better margins than TPL. I can show you what I mean. Maybe you are watching this video and you are familiar with TPL. TPL is known for being a oil royalty play, and since 2017 they created this water segment. So they did a little bit of capex to develop this water infrastructure on their lands, and the margins went down. The margins for the water segment are lower than the oil segment. So you have a little bit of capex. Let me show you what I mean in financials, ratios, custom metrics. Yes, okay. This is why fiscal AI is so great. You can use my link in my description to have a discount. Okay, let me check two things. Let me show you the net income margins for lands and oil. And let me show you the net income margins for water. Here you go. In gray, that's the land and resource management. So oil, lands, easements, the selling of some lands. So 70% net income margins, extremely, extremely high. And then you have the water segment, 50% net income margins, okay? Lower, but still extremely high, right? Compared to other businesses, extremely high, okay? So the segment from water was developed in 2017, and it is up 20% per year since then. This is just phenomenal. Even more than this, it's just phenomenal. More volume, more price. This is just fantastic. And I can show you another ratio that you will like. Here you go. This is the capex for TPL over the years. As I told you, in 2017, they developed a new segment about water. So since 2017, more capex to develop in-house the infrastructure. More capex. In 2020, everything was shut down because of the pandemic, and they started again to develop more capex to develop their water segment. Let me show you the same graph. Let me show you the same graph for LandBridge to see the capex they have. Here you go. You have the capex here. $3 million of capex, $2 million, $1 million in capex. Okay, I have here the capex to revenue. So the capex divided by the revenue for TPL and for LandBridge. What you see is since 2017, this is in percentage, right? So now TPL has a capex that is equivalent of 5% of the revenue. Okay, so they are starting to build in-house their own infrastructure, which is not the case for LandBridge. WaterBridge is using the lens of LandBridge. Okay, so LandBridge doesn't create anything. They don't need to develop their own infrastructure. Literally, WaterBridge is using their lens and LandBridge is just taking a royalty. Same thing for PowerBridge now. They will use the lens of LandBridge and LandBridge will not do anything, not incur any costs. They don't need any employees. They will just get a royalty for everything that is happening on their lens, basically. So you have an even better margin profile compared to TPL because TPL is doing some capex here and there. Literally, LandBridge is doing zero capex, zero cost, zero capex. It's an even better royalty play when it comes to profitability because based on this agreement and this complex shareholder structure, they will not have any cost and any capex. So a very good free cash flow conversion. Okay. And yeah, it seems like the thesis is still intact. And to some extent, LandBridge is more profitable than TPL and available at a cheaper valuation right now. So I forecast this company to have a free cash flow that will be very good for 2025. I expect LandBridge to have a free cash flow of $120 million, something like this. What is the market cap right now? $4.2 billion. And I estimate the free cash flow for 2025 to be at $120 million. So now I am buying LandBridge at a price to free cash flow of 35. It's not cheap. It's still not cheap for anyone who is a value investor. Maybe it will not be the best investment for him or her. But for me, I like it. I like the stock. I like the company. And I believe this is a company that can grow a lot more than you think. This is a company that can grow double digits for a very long time. The runway is huge and we are in very safe hands. The management knows what it is doing. They can grow the free cash flow by a minimum 15% per year for a very long period of time. And paying a price to free cash flow of 35 for all the qualities I see on TPL, I don't see this as extremely overvalued. It's definitely not cheap, but it's not egregiously overvalued. And I'm willing to take the bet because when the market starts to see what I'm seeing here, because you will have a longer track record, better articles, no more fake articles, press releases, or maybe some piece of news when it comes to data center projects, maybe the stock can shoot up. And a couple of months ago, we were at $80, right? The $80 per share. So just this rebound back to $80 will get plus 40% in the holding. So I bought more at $60, I bought more at $55, and actually I hope for the price to drop a little bit more so I can increase my position for the very, very long term. As long as people don't understand this company, as long as the thesis is still intact, as long as we still need water and energy to develop the world, the thesis is still intact, I will buy more and I will be very happy to buy more. So let me check my notes and okay. Yeah, but you will see many things online that are false about the TPL, many things online that are good about LandBridge. I recommend you look at Leo Nelisen on Seeking Alpha. You can just go to Seeking Alpha. Yeah, this one. I already typed this one. No, this one. You have somebody on Seeking Alpha writing great articles called Leo Nelisen. He's more than welcome to come on the channel to talk. Why not? And talk about LandBridge, TPL. He's a big insider, not insider, but he owns a lot of shares about LandBridge and TPL. And for his portfolio, I don't know the size of his portfolio, you have a lot of concentration. Like 15% of his portfolio is TPL, 15% of his portfolio in LandBridge. That is one of the most expert guys I know about the water play. So very astute investor, I would say. So please read his articles if you want to go deeper. But I think on this video you have plenty of information already to have a guess about if LandBridge is inside your circle of competence or not. And this is also what we discussed on my coaching program with clients, because some of my clients are investors in LandBridge. They believe in the thesis, bottlenecks when it comes to water, infrastructure. It's a call option on data center projects in the future. But the big thing that will move LandBridge is water. And inside my coaching program, we talked about the insider selling, etc. We talked about the plays, what we see for the future, and the future can be quite bright. So of course we can be wrong, as always, but I like the risk reward right now. And if you want to be part of my coaching program, you have a link in my description. You can book a call with me. You will have plenty of more information. You have maybe my website, or you can click and book a call with me to see if you are a good fit. And if you are a good fit and you are motivated, we can work together to find LandBridge and to find the next one. And if you do this long enough, you can fill your portfolio with great opportunities, with an attractive risk reward. This is the solution to beat the market. I've done this for almost a decade now. My performance is maybe 24-25% per year right now, including 2025. So I think I have an edge over there to find these quality investments that nobody understands really well. To some extent, the LandBridge is one of them. But I have other companies and other companies we discuss inside the coaching program only for them, because I like the relationship I have with my clients. So if you want to be part of the group of motivated investors inside the coaching program, feel free to book a call with me. This is maybe the first link in the description, and I will see you on the other side.